All right, folks, let's jump over to our man, Tim Ord. We talk to Tim every Tuesday and Thursday at the bottom of the hour. You can reach Tim at ord-oracle.com. Tim Ord, good afternoon.
Good afternoon. So, well, let's jump into the market, see what they're doing here.
Well, let's do it. We got a lot of green on the board. Let's do it, man.
Yeah, this is kind of a short-term view. This is a daily chart, the SPY, and outlined in blue here, there, and there, and there. Only thing I'm trying to point out is these a trend reading above 1.2 and a tick reading around minus 200 shows panic in the market. Panic usually comes near lows. It can be off a day or so, but price-wise, it's pretty close to the lows. Okay. If you notice right here, we had one right there and another one right there. Market didn't really rally off of this one, but the one we had what's today? Tuesday last week. We're finally getting some energy to the upside here. So I just want to point out we do got enough panic in this region to bust out of this sideways trading range that's going on between 580, 590 on the SPY. So how high is high? Not a whole lot higher. We think what's going on here is a head shoulder's bottom. The right shoulder formed here between December and February, or that's the left shoulder rather, between December and February, part of March, went down to an April low down here. Market went all the way back up, got above these lows, formed back here in this region right here. So you busted above those previous lows. That implies that a minimum should get back up to the previous highs, which is up around this 610 area. And I think that's probably where we're going to go. So I'm thinking what's forming right now from here probably until August, I think is kind of the time frame, maybe part of September. But this is probably the forming of the right shoulder. So we're going to probably form a trading range in this vicinity. Okay, right here. So up, probably back down. The only reason why I think that it's going to take that long because the right shoulder and left shoulder, time-wise, a lot of times similar. So you don't have a week-long right shoulder and a 4-month-old left shoulder. So in general, they're pretty equal in time. So that comes around the August type kind of time frame. Okay. So I think 610 next time up, you're going to hit this high, going to find resistance, probably fall back down, find support pretty much where we are. We're actually around 570. Then from there, kind of rally up. Actually, this shows a little bit better what I'm looking at. This is a monthly chart. And the reason why I'm thinking this is pretty much of a head and shoulders bottom is because of the volume chart here. This is RR. Actually, Joe DiNapoli figured this out. This is his books. I don't know when he wrote it, probably 80s or 90s, but he called it the railroad pattern. And what it is if you get a big down volume here going down, I don't know, the volume looks like about 1.5 billion shares on that March decline. Yep. Then you had an April decline, but then right after it, you had a May advance that pretty much equaled in volume. And if you notice, the charts or the monthly candlestick patterns are almost identical. You know, one's a little bit smaller than the other. But anyhow, you got the volume pretty much equal, and you got the pattern of the candlestick just the opposite direction. Here you went straight down. Here you went straight back up. They call those the railroad tracks, and those only happens at reversals. So the market is not going to go back down and test the April low. That's going to be just a downside finger, and it's not going to be tested, at least not anytime in the near future. But anyhow, so that kind of confirms the bottom. No test. You're going to take a shot at the neckline here up around 610. I'm thinking to get through that neckline, you're going to have a lot of volume to do it. You have to have a ton of strength through that neckline. I don't think that's going to happen in the summer. June, July, a lot of times kind of a lackluster months. The ball really starts rolling in August or September, volume is concerned. So I'm thinking this first time up, you're going to find resistance, and that's ideal because, you went sideways here for 3 months. Most likely you're going to go sideways for 3 months. I did a kind of a cycle theory there. If you can see that half moon lines here.
Sure.
You go up and you come back down.
Yep.
So you start in December, you go to the April low. Okay, that's half of the head and shoulders. To get the other half of the shoulders, that comes in August. So that's how I came up with August, probably an ideal date for the low. So I think you bounce off that high 610, probably waver back down to some sort of an August low. Then that's when the energy pretty much begins in the market again, around that August time frame, sometime in September. But I think we bust through that neckline sometime in August, September time frame, and you rally all the way into year end. This head and shoulders pattern, if you do the measurement, in other words, you take the bottom of the head and you go up to the neckline, you measure that, and you add that on to the neckline, you come up around 740, which is about 25% higher than where we are. So a little bit of mushy going into, I don't know, the next few weeks probably, but ultimately we break out above that 610, head probably is 740. Will we reach 740 year end? Yeah, maybe. If not in January, probably, if not February. So it looks good.
Not bad. Yeah, you're talking about more than 20% from where we are right now at 600, right? And, I like that the fact, it would make sense, and this is in my own head, Tim, but, I was just looking at the charts, a little consolidation wouldn't be that bad when you just traded from, 350 in the SPY in 2022 to 610 in the period of just over 2 years. So it's up 75% from that low. And yeah, that was an exacerbated low, but you chop around for a little bit, maybe before that next leg. I know you got some more charts. Can you hang with us? We'll finish it up after the break.
That sounds good.
We'll be right back.
Here.
Welcome back, folks. We got green across the board. We're talking to our man, Tim Ord. Remember, you can reach Tim at his website, ord-oracle.com. And yeah, let's keep going, Tim. So I know we've talked the S&Ps, and are we going into gold now?
Yep. Actually, I wanted to say, Joe Nanopoli was your dad's classmate back in Boston.
I remember. So I know that. Now, I don't know him as well as you guys, but I was at plenty of conferences where I spent some good time with Joe and my dad, of course. And my dad had some great stories. I know, right? But go ahead. Yes, for sure. Man.
So I just want to put that in there. So anyhow, let's get to the gold market. Now I'm a big bull on gold, especially gold stocks.
Okay.
And so, but right now, I think there's still a timeout. I sold out of my position in mid-April, I don't remember, but a little bit right around the 50 range. But anyhow, this is a chart. The bottom window is the GX utility ratio. Next window higher is the GDX advanced decline cumulative, and next one higher is GDX up-down volume cumulative, and top window is there it is, GDX. But anyhow, I just did a Bollinger Band on it. It's kind of a simple indicator, but if you get 3 of the 4 that pop up to the upper Bollinger Band, normally you get consolidations, and all those blue dotted lines are consolidation phases when 3 of the 4, if not all 4 of those indicators pop above the Bollinger Band. Well, so so this is, but they're not long-term sell signals. Most of them last a month and a half. So, but I think this is just a double top. We'll look a little bit further here. Go to chart number whatever this chart is. But anyhow, this kind of confirms the what kind of going on. The bottom window is the 18-day average up-down volume. The next window higher is the 18-day average of the advanced decline. And that it is, but it shows divergence real well. If you notice the divergence there, and actually the market went higher. And previous times it did that. You get a consolidation that lasted, most times a month or two. So you got two types. got two different indicator types anyhow. They're saying you're just going to need a rest here, especially if the market moves so fast. That's usually kind of burns the candle to a low end, I guess you might say. So I'm looking for a pullback. So where are we going? I've been saying this for about a month, or actually since mid-April. This is probably three drives to the top pattern. And a lot of times the three drives to the top pattern does make a double top. So we got a top a little bit higher than we had in April. But anyhow, my opinion is still double top. And I still think this big day we had yesterday was probably a buying climax. And we're still going to get a pullback down to 39. So this is still just a timeout and an uptrend. It meets all the requirements. Sometimes you get double top and three drives to top pattern. It's not an end of the world. The bigger trends are up. But I think this is just still a pullback. So I'm still long a lot of these gold stocks, but I'm longer the smaller ones right now. The big ones, I'm kind of just waiting for the pullback. If we do get to 39, maybe we get something higher. I don't know. But I think the upside's still limited here. But the idea is keep your eye on the bigger trend. I keep showing this chart. This chart really hasn't changed much. This is still on a buy signal. Got a buy signal back. It looks like about January, February of 2024. The bottom window is the cumulative advanced decline. It's cumulative up-down volume with the Bollinger Band on it. Next one up higher is the cumulative advanced decline with the Bollinger Band on it. This is on a monthly time frame. And the top window is GDX on the monthly time frame. We're running into the highs of 2012 there. We're a little bit past it, but I don't think it's probably going to hold. Probably come back to this area right here, which is around the 40 area, which is kind of back to this chart. Get back here, which is back down to 39. So that 39.40 area has massive support. So that's the time to get back in the blue chip gold stocks. But
sure,
this chart's not even near a sell signal. I mean, as long as these two indicators on the bottom hold above the mid Bollinger Band, the trend's up.
Nice.
This is so yeah, you're looking for a consolidation. Consolidations are good. They build cause in the market for the next rally. So this impulse wave we had the upside is probably going to come into a halt here, and we're going to probably flip sideways to down for a month, maybe two. I don't know. So July, August. It's not July. Yeah. July, August, maybe September. I don't know. I don't think we're up that far, but maybe both markets, the equity market and the gold market, may consolidate together into August time frame. So we'll have to wait and see. But not a big bear. Trends up. Still early in a buy signal. I got some indicators on a cycle basis says we can possibly push out to 2027. There's some other indicators that this 2024 low could be a 12-year low. But we'll cross that bridge when we need to. Right now,
no, I like it, and I appreciate the analysis as always, man. And even myself, I'm in a similar ballpark, Tim. And that's whether you're talking about the price and volume, of course, but boy, the heck of a run it's had. Like you're talking about a little consolidation. You almost doubled in price in the price of gold itself over a period of like 2 years. Talking about what 1,800 gold was that in October of 23. And here we are in June of 25, and you hit 3,500, almost a 100% acceleration. So, yeah, a little bit of a breather on a short-term basis. I would agree. Hey, I had a question in the YouTube Tigers Den over here, and they were talking about they were ready for you to bring up that chart with the three drive to the top pattern. And they were just wondering in general how, and you kind of covered it, looking for potentially the pullback to 39 there. But when you get a move that we got where you almost peak over that third peak, right? And how is that something that changes that at all on a broader perspective? They were just talking about that when they were getting ready. They love that pattern and saying, man, now it's almost a four drive. How do you look at that when something that it's, again, peaking even again above those drives?
Well, actually, three drives to top pattern is common for the three drives to top pattern to have a double top. I actually even mentioned that in my market letter. I'm thinking, it didn't look like it was going to do it. Then all of a sudden, this does it.
There we go.
But
perfect.
You got to look at these other indicators too. They're also kind of saying the same thing here. This is a double top on this indicator here. than this one here. You're making higher highs. These two indicators should be making higher highs with it. So there's something, topping, but 3 drive top, a lot of times you just have a single top, but sometimes they're double tops. Doesn't change the pattern. I still think 39 is a possibility, but I get the indicators that, if something higher or lower than that, I don't think we're actually going to break much below 30, 40 area, because there was a massive support line on one of my indicators here. I forgot which one it was. I think, oops, I don't know what that is.
That's right. That's a great answer. That's exactly what he was looking for, though. So, that you get another drive right to the exact spot. We're just barely right there. And then, maybe a little bit of a pullback. Right. Well, Tim, I appreciate the couple segments, as always, man. Great information covering the markets, covering the gold market. And we look forward to talking to you on Thursday.
All right. Talk to you then. Thanks for having me on.
Talk to you then.